And of course, one of the things the Fed is talking about doing, which it may in fact never do at all, is raising interest rates. Because you have to remember that throughout the entire period of the taper, where the Fed continues to do quantitative easing on a monthly basis, but reduces the amount of QE it does on a monthly basis, but during the entire process, interest rates are going to remain stuck at zero. And all they're talking about doing is at some point in the future, after they finally ended quantitative easing and the Federal Reserve's balance sheet is substantially larger than it is right now, because between today and the time they finally end QE, if they ever get to that point, they will have bought a lot more government bonds and mortgages. So there'll be a much larger balance sheet. What they're saying is at some point, we're going to raise rates, but they're at zero. Where are they going to raise them? 0.5%, 1%? Look how high the inflation rate already is. Real interest rates have never been more negative than they are right now. If you've got interest rates at zero and the official inflation rate is 6%, unofficially it's much higher than that, but if you're at 6% and your interest rates are at zero, the yield is negative 6% because you have 6% inflation and you're getting zero interest. So none of what you lose to inflation is being returned to you through interest. So even though the nominal rate is zero, the real rate is negative 6. Even if the rate went from negative 6 to negative 5 or negative 4, that is still extremely bullish for gold. What you would need to have an environment that is negative for gold would be high real interest rates, not negative interest rates that are less negative. But the reality is interest rates are likely to go more negative because the 6% inflation that we're experiencing now is not the ceiling, it's more likely the floor. We're going higher from here because the Fed is doing nothing to actually fight inflation. Simply talking about tapering and even tapering your QE program is not going to fight that kind of inflation. You're not going to put out a 5-alarm fire, which is really what we've got, with a water pistol, and they don't even have that. What they're going to be doing is they're going to be accommodating an increase in inflation as they're pretending to fight it. Inflation is going to be winning because the numbers are going to get bigger and bigger. And so I think that everybody who is selling gold or selling gold stocks because they assume that what we're going to experience is a normal tightening cycle still doesn't get the bind that the Fed is in, and they still haven't figured out the way this game works, because whenever the Fed tightens, whether it actually tightens or just pretends to tighten, but the minute they start doing that, they sow the seeds for the next easing cycle. And each tightening cycle becomes smaller and smaller, and each easing cycle becomes bigger and bigger. If you recall what I was saying during money shows when we first launched quantitative easing, when the Fed announced that it was going to end QE, and eventually it was supposed to shrink its balance sheet back down to where it was before the financial crisis, not only did I say that was impossible, not only did I say that if the Fed ever tried to taper, it would have to abort the mission before it was completed and run the balance sheet back up, because that's exactly what it did. But I said when the Fed was forced to do QE4 as a result of the next economic downturn, that QE4 would be bigger than QE 1, 2, and 3 combined. And that again was an accurate prediction, because the Fed's balance sheet is now what, 8.5 trillion, and the highest it got after QE1, after QE3 was 4.5 trillion, and it was about 800 billion before they started QE. So what the amount of QE that we've already done, forgetting about the amount that we're going to do between now and a successful conclusion of the taper program, it may be triple, right? QE4 could be 3 times the size as QE1, 2, and 3 combined, not double. And even if the Fed succeeds in ending QE this time. When they have to start it up again, when they have to do QE5, it's going to be at least double, if not triple or more, what they just did in QE4. And just like the easing cycles get progressively more easy, the tightening cycles get progressively less tight. Where was the Fed able to successfully raise interest rates to following the bursting of the dot-com bubble? When they lowered interest rates to 1%, and then when they tried to normalize them, they actually got back up to above 5%. But then when we had the financial crisis and the Fed brought interest rates down to back down to zero, how high could they get them? The highest they got was about what, 2.25 before the wheels fell off the bus in the fourth quarter of 2018. And then we went right back down to zero. But in the meantime, when the Fed went to zero following the financial crisis, that wasn't low enough. They needed quantitative easing on top of 0% interest rates because the bubble was so big and the hangover so big when it popped that 0% wasn't enough. The Fed needed quantitative easing in addition to 0%. But in the prior cycle, not only wasn't quantitative easing needed at all, but we didn't even have to take rates to zero. 1% was low enough. But because of the enormity of the bubble that the Fed inflated with 1% interest rates, when that bubble popped, 0% wasn't low enough. We needed 0% and QE 1, 2, and 3. Well, when that bubble popped following COVID, even 0% wasn't enough. So we needed QE4 to be even bigger than QE 1, 2, and 3. And we needed to expand it into other assets like junk bonds, which is also part of what the government is doing. And not only did we have QE for Wall Street, but this time we got QE for Main Street, right? The economy is so screwed up because of all the debt and all the leverage that this time the government is sending out money directly to the people, right? We're getting these government supplemental unemployment programs. We're getting rental assistance. We got the PPP, the forgivable loans. We didn't have any of this stuff in the prior Great Recession, but all this stuff is happening now because the economy is in a much weaker position as a result of all these years of stimulus. In fact, even listening today, because they just started the Jackson Hole conference today. Tomorrow, we're going to hear from Chair Powell, and he's, of course, going to talk about taper. I think we had Bullard. I was listening to him interviewed today on television, and I forget another Fed guy that was on there. Of course, they're all talking about taper, and the market reacts to this. Even though they're not actually doing anything, they're simply talking about doing stuff. But what I'm noticing among these Fed governors is they are basically applauding the U.S. government for the fiscal policies that it pursued following COVID. And they're saying that the government did an excellent job in helping to replace the demand that went away due to COVID. That was not the correct decision. That was a mistake. The government was wrong to replace that demand, and the Fed was wrong to monetize those efforts in order to accommodate all that extra spending.